I think we're live. This is like
We
my
are live.
third time doing this on StreamYard.
Oh, really? What program do you used to use?
I don't live stream, man. I don't live stream because I stutter too much and make too many errors, and I just like my things pre-recorded.
Well, you got the look, you got the looks and the voice for it, so you're good.
Yeah, well, that's the thing, dude. Every SoFi weekly we go live. You're just in the comments, just making me laugh, and I can't hold it. I always look at the comments and I always crack up.
Well, I try my best to. Well, that lets people know that I'm not always critical of people, which is good. You know, I do hit on some people out of admiration, but I do say you do have a very trustworthy nature to yourself. So I think you don't give yourself enough credit, and I think hopefully that continues to shine and the platform continues to grow because I think you're a great addition to the community.
Hell yeah. Well, no, it's glad that we're actually like merging these different worlds. I know you talk about Palantir quite a bit, and it's a position that I hold as well. So I think we're going to touch on Palantir. I mean, I'm not too much of an expert on Palantir. And then I think there's some things that we can touch on SoFi as well, and then all your other positions. So I was just looking through your channel just before this call, and it seems as though you mainly do dividend plays. So walk me through that. Like, walk me through the Spark Notes.
Sure. Yeah. Spark Notes of MATTMONEY. So 10 years ago, I started working full time at an undisclosed oil and gas company, which we can get a little bit more into if we need to talk about Palantir. But I really joined the industry, oil and gas industry, at a very volatile time. I came in when we were having Christmas parties where you could get a drink at the bar for anything under $25, and it was paid for by the company. Right. Everything was great, right? Oil was $100 a barrel, and it had been for several years, and everybody was having a great time. It was a party. And then within about 6 months to a year after joining, oil price, as people may or may not remember, probably went to like 28 or 38 bucks a barrel in 2015. And so people start getting, unfortunately, let go. And that was pretty impactful for me, seeing that at 23 years old, seeing people, which I thought, this was one big party, now getting kicked out of the party. The bouncer showed up. Right. And so that was a big impact for me. And so I was like, well, that's not going to happen to me. I'm not going to be caught with my pants down. So I was like, dividends are the way. And, at the time, I started off doing penny stocks and stuff like that. And that was a rude awakening. Obviously, penny stocks are never really that advantageous. And then I, see this happening. And this is when I really just started getting involved in investing, getting my finances in order and really starting to get cash flow through the door. So dividends were the way. And then I recognized over a 4 to 5 year period that dividends were not the only way. And I started to recognize that companies that do grow are a decent way. The only thing that matters isn't necessarily dividends. And it also got to the point where, I'll just put it in perspective. Like, I think in like last year or 2 years ago, I made over $20,000 in dividends. And I was like, you know what? I was like, if I need to turn on the dividends, I can, right? And that's kind of when I've started now being this kind of hybrid where I do still get my dividends, and even the S&P 500 pays dividends. So it's kind of in this mixed world now where I mostly lean on, say, the S&P 500 to make sure that I'm at least maintaining my status with the market and outpacing inflation.
Right.
I was investing in a lot of energy companies, high dividends. I was investing in like Altria Group, very high dividends, and the growth just wasn't there. And so I started to recognize, I was like, well, okay, I could grow the dividends to like $100,000 a year, but it's never going to give me that meteoric rise to really change my long-term, I guess, quality of life. I was like, if you're making $100,000 a year versus $150,000 a year in dividends, it's like, that's basically the same. And you're going to be kind of be in the same quality of life. I'm like, I really need to get to 8 to 10 million. Right. And that's when you kind of like break through. And so I really started to see that vision probably like 2-3 years ago. I was like starting to make a good amount of money. I was an expatriate living in Trinidad and Tobago.
Cool.
And that's where that transition sort of started. And that's kind of where I'm at now, that hybrid of like dividends plus SPY plus a few speculative positions.
That's actually I can draw parallels from just myself too, because I started in 2017 and just day trading penny stocks like a fucking degen,
Yeah.
and then lost a bunch of money there. Thankfully, I didn't have a lot of money in the market. I had like under 10K total, so I got off relatively unscathed. And then dividends was always tantalizing to me because of people like Joseph Carlson, right, who just drip in
Mm-hmm.
and they just reinvest all of the dividends just back into the market and just build that snowball higher. But for me, it was just never. I wanted to grow faster, right? And dividends just seemed like a slower play. Which I mean, now that I've been in the market for a little while and my portfolio is significantly larger than when it was when I started, I'm like, okay, well, there is definitely merit to dividends. I was always, when I started, of the opinion that I'll go in high growth names like volatile, high multiple stocks today. And then because I have a longer time horizon, and then once I actually accumulate a healthy amount, then I can flip to dividends for the cash flow aspect. And I don't think I'm there yet, but it's definitely, when you have a down year or when you have just a couple of names that aren't just performing well, it becomes really, you get FOMO around like, I could have been paid, 10 grand or 20 grand this year on dividends. So I totally get the appeal.
Mm-hmm. I just recognized, like, especially in 2021, everyone, it was off of a rocket year at the end of 2020 going into 2021. And at that point, I was trading options and doing really, really well. I still do options, but not to the severity as that I did back then. And anybody that had a pulse was probably making tens of thousands of dollars. And I was in that club. I did really, really well in 2021 with options. And then the beginning of 2022 happened and the reversal kind of started happening with my portfolio. But late 2021, I like came to a decision. I was just like, I'm fortunate enough to have saved and worked, and people are gonna be like, oh, you didn't work long enough. I've been working for 30 years. Like, I get that. But like the ability for me to have saved 30 to 40% of my income, and I have a decently paying job. So that ended up being a pretty good amount of money. Coupling that with a great market, I was very 2021, I was like, do I leave the workforce? Do I kind of do this YouTube thing full time? I was doing relatively well. I was making sponsored videos as well. And, not necessarily trying to push penny stocks on people, but, just let people introduce themselves to silver, gold companies. If they're interested in that thing. I personally am kind of like in between. I don't really necessarily believe in a lot of that stuff, but it is what it is. And, it was just like, I made the decision. I was just like, at 30, 31 years old, I was like, it's too early to leave the workforce.
Right.
I was like, I'll wait another 4 or 5 years, probably till I'm 35, and then maybe hit another pivot point where I'm like, okay, now is it time to go full time into content creation or what have you, and continue to build the influence and all that sort of stuff. But it was an interesting time at that point because I was just like, I don't know. I felt like a lot of people had the same sort of thought process. Everyone was working from home. Everybody was being influenced by the pandemic. YouTube money was kind of going out crazy. Everybody's stock market portfolio was going crazy. Just a bunch of inflation in any sort of sense of the realm. So,
Right.
But anyway, now things are kind of normalized again, and we'll revisit that conversation of whether or not I leave the workforce in 2 to 3 years.
Hey man, I'm somewhat in the same boat. I mean, so here's the thing with me, like I feel as though I'll always be working crazy hours because I really love what I do. But at the same time, I feel like at a certain age, I'll have the financial flexibility to, basically do my own thing or, not work for someone or a company that I don't like or not work for a job that I don't like just for the paycheck. Like the golden handcuffs are going to go away, so to speak. Right. And so I'm in the same boat. And if you'd asked me last year or 2 years ago or whatever, I would have said, yeah, I'm definitely going to retire in my mid 30s. And while financially, like I could be on track for that, I don't, I feel like I get bored, right? It's the habits that sort of get you there to that point where you have the financial flexibility to retire in your 30s are the same habits that make it really difficult to do so because you just get antsy, right? You need to, like for me, I need to have 10 projects on the go at all times. And I don't make a lot of YouTube videos now. I make maybe one a week, and then the podcast, and that's just because I'm just busy doing other things, right?
Mm-hmm.
So I get it. I'm in the same boat.
Yeah, when I say retire or leave the workforce, it doesn't necessarily mean, and I will do more of this, which is like go to Thailand and put my feet up in the sand and drink some beers. But I definitely would do some more of that if I had the opportunity. But like you, I don't think I get a very good sense of purpose by providing the world with oil and gas. Right, my biggest MO personally is to help people. And providing them energy, I think, is the best way. I mean, they don't recognize it. It's something that's almost like taken for granted in a lot of places in the world, to be able to go from point A to point B and heat your homes. And so I get a lot of satisfaction knowing that I'm providing that. And but at the same time, the thing that bothers me most is I'm kind of secluded away from my family. Like they're still all in Pennsylvania. I live here in Texas, and I'm kind of stuck between this dichotomy of, do I continue to live a purpose and add energy to the world and help people the best way I know how to via my education and just wanting to provide a purpose to my life, and then stuck with being away from my family, seeing them 2-3 times a year. Of course, there's always the ease of using FaceTime and stuff like that, but seeing your family grow up and your nieces and nephews grow up, it's kind of a little bit difficult, and that's part of it as well. But leaving the workforce, I would never truly leave. I like the real estate aspect of things. I'm one of the first few in my family to really get involved in the stock market. A lot of my family members always did real estate, whether that was construction or flipping or long-term rentals. And that's kind of how I grew up, was seeing a lot of that stuff going on. And so when I started talking about the stock market, a lot of my family members thought I was a crazy person. And to be very frank, they're probably right. I do have my eccentricities around me. So, but yeah,
I get the same.
What would you do? Would you dive back into what
into tech? So I work in tech, and I really like it, man, because it moves at a fast pace, and I feel like everything else is too slow for me in terms of the levels of bureaucracy and red tape and approvals that are needed. And then I feel like tech is very meritocratic and not very ageist. So I can be at a relatively young age commanding a high stakes position with a big team. Whereas in a traditional company, I need to be like 40 or 50 or wait for the next guy to like retire, basically, to get his job. So a lot of those barriers that have traditionally been there don't exist in the tech sector. And it's testament to it growing so fast, right? So, I mean, for me, I think that is an exciting part of it. And then in my day job, I do product management. And that's sort of like you're solving different problems every day in terms of you got to organize the resources that you have to make the best decisions possible, which is really fun. Like there's a game theory aspect of that I really enjoy. But yeah, so we'll get back to stocks here in a second, because I see some people in the comments are talking about Palantir. Some people talk about SoFi. So do you own any SoFi now?
I don't. I actually have some puts though. Not long puts, not long puts, some short puts at the $5 range. So I'm hoping, I don't dislike SoFi. I'm just not as knowledgeable as you guys on SoFi Weekly, but I do watch every week, and I do think that while I don't necessarily know as much about SoFi per se, I do think traditional banking is in need of a big shakeup. And so companies that are coming along, like these fintech companies that are really trying to stick it to the normal traditional banking system, like when PayPal came around, that kind of launched like Zelle and Square and Venmo, all these kind of new companies that really started to put a thorn in traditional banking's side, I guess, is really something that I admire, because I think there's a bunch of industries that have just been kind of what's the word I normally use for this particular? They've kind of just been sitting on their laurels, I guess, like oil and gas companies with like the traditional, gas stations, traditional banking, real estate, having the 6% transaction fees, like that sort of stuff, where it's just like it's done, it's over with, right? The middleman needs to be cut out on a lot of these things, and Yeah, go ahead.
If you believe in the long-term macro opportunity, like the secular growth trend, then what is it just like a lack of understanding around SoFi specifically that holds you back?
For sure. I think it's that coupled with it's a very competitive space. And I've heard the one thing, so I haven't done too much research, so I can't speak too much on it. And I'm just going to blanket that because I hate when people start talking trash or like have a negative opinion. I'm just going to say, like, I haven't done enough due diligence. And I did own it for a little bit of time. It used to be part of Shamath Palapatia's social capital, one of its SPACs. And so I did own SoFi, I think, after it de-SPACed a little bit, and I made a decent amount of money, basically just having it at the $10 range, which is what it kind of started off as a SPAC, to when it went to the 20s. And so I did have it back then, and that was more so just based off the fact that it was a blank check company, and it was $10 in a unit, and it just happened to be with SoFi. So that wasn't any real reason. And back then I did read kind of like the initial I guess merger documents and stuff of the like, and I was like, okay, cool. But at the same time I was sitting on 150% gain or something like that, so I took that, right? So I sold it in the mid-20s, not too long after it de-SPACed. I did have I have played a little bit of options on it when it does, on its way back down, and it's had some kind of retracements up back to the upside, but I haven't really initiated a long position. The reason being, I guess, instead of just talking around it, is competition in the fintech space is very fierce. Excuse me.
Like from who?
Sorry, not fintech. The finance space, I should say, not fintech.
Traditional players, you mean?
Yeah, just traditional players. It's like, is it going to get enough of a market share to really make a difference? There's a few other things that I have been keeping my pulse on. It's not Aladdin. What's the big thing that SoFi acquired like 2-3 years ago? Galileo. Thank you,
dude. Okay, so this is my thing. Palantir Weekly is right after SoFi Weekly. How do you sit through all the SoFi Weeklies and just not, like, through osmosis alone, just pick up some stuff about SoFi?
I'm mostly
I see you in the comments all the time. I know you're there.
It's mostly me looking at you and in admiration of you. And then there's another person that has the exact opposite of effect as you do. And it's sometimes focused on them. But also, I'm generally speaking still finishing up my day sometimes, and I'll be looking at work and stuff when that's going on, and just chiming in and mostly reading the comment section, to be honest, and getting involved in the chat, probably too much more. But yeah, Galileo is something I'm keeping track of. And another thing that I was kind of looking forward to was also this, whether or not student loan repayments were going to be a thing, or getting back to that, because I know that has an impact on it. But also I've heard, while people like the product, the one thing that is really, I guess, like I said, I don't have as much due diligence nearly as you guys on SoFi Weekly, is the user interface. And I think that if you truly want to move from where Jesus Christ, open up wellsfargo.com, not right now, but I'm just saying in general, anybody listening to this, and you're looking at the 1990s, like it's awful, right? And it's gotten better, I will say. And same thing with JP Morgan and Amex.com, but it's like, come on, my guys, like it's just, it bothers me. So having something that is good from a SoFi perspective, but is still somewhat pertaining to that, is a little bit bothersome. And like I said, I haven't done too much research, and it's probably light years better, but I have investigated it. And the things that does make me happier is like the weekly ETFs that they kind of have that are coming out. And so I think that they're trying. I'm just like, is it going to be enough to disrupt traditional banking? And I just don't know if I'm there yet, but I haven't done my due diligence. So I would love for you to educate me. I mean,
I can try to convince you if that's what you want, but I
don't need convincing. I mean, I feel like at the right price, I will buy, because I think that there is an upside opportunity.
It was like $5 all year long.
I know.
And
I
and
know.
you bought it at 10, so that was a 50% discount to the SPAC price.
Yeah.
What
So
so what is enough? So you said I don't know if it's going to be enough to disrupt the tradition. Like what does that mean? What is your framing? What's enough?
I don't know. I think
Okay, so the US is what? 300 million plus 330 million.
yeah.
SoFi's 5 million members. What's that number where you're like, "Oh, I don't know if they're going to reach that number."
It's a good point. I'm just gonna be blunt. Like I haven't put a lot of thought into it, man. And I'm not trying to, shove off the question, but I don't want to like lie, right? I don't want to just like talk
Sure.
out of, but the fact that it's 5 million, I mean, that's something that's really. I mean, this is my genuine reaction. It's like that's pretty impressive. Like I think that's something that you can't scoff at. 5 million people using your product is obviously a lot of momentum, and I know it's growing very quickly. Like I have caught that from what you guys talk about. Downloaded applications is something you guys talk about a lot on SoFi Weekly. So um, it does warrant. I'm not saying it's not something I wouldn't think about. It's just something I haven't done enough of. And I don't blanketly like to buy positions.
Right.
Um,
No, it's fair.
so it, but the conviction, that's why I did sell puts. Like I didn't sell a small amount of puts. I mean, it might be small compared to TJ, but I sold 20 contracts at $5. That's what, 10 grand. I don't know. It's not, I think it's 10 grand, 500. Yeah. 500 a contract times 20. So it's like 10 grand worth. So that would be not a decent, it's a small starting position, but I'm in a different wavelength than some people. So, but the way I look at it is I'll probably continue to sell that. I forget if it was like an August contract. So, while it's down below 10, I would love to continue to sell puts at the $5 range because I do notice that I honestly thought I had more time, right? And same thing with Palantir, right? I think that this reversal in all trends, small caps and micro caps, it came way quicker than I was anticipating. I didn't think Palantir would jump to the $16 range either. I thought we had another few quarters, and that was honestly one of the reasons why I hadn't initiated a position in SoFi is I thought there wasn't a clock immediately. I knew in 2025, 2030, it's going to be a decent position, but yeah, I didn't expect this big role reversal over the past 6 months.
Yeah, and it's been quite crazy actually. The entire macro and the sentiment. I mean, once you remove that level of uncertainty and doubt in the market around the Fed raising rates, and once people see the sort of employment numbers come out and all the inflation rates come down, they realize, oh, wait a minute, we're going to have a pullback, but everybody was expecting that, but it's not as bad as everybody was saying or as the Fed was telegraphing, and money starts to flood back really quickly. I think so I think that for me, I'm sort of the opposite, where I'm right now circling selling Palantir. Because while the market all ran up, it ran up disproportionately for Palantir because Palantir had two big tailwinds. It had, the market, like macro, that just money from an institutional perspective as well as a retail perspective started flooding back. But then it had this entire like ChatGPT fueled AI wave that it was riding on. Like the AIP program came out and it just blew up. And I bought more Palantir at like $8, and that was like all well and good. I bought it actually, I think the day they announced the AIP or a day after. And right now it's whatever, 16, $17. I think it went to the top.
Mm-hmm.
And I'm just like, okay, well, fuck, man. Like this thing has run, 100%, over 100% from literally when they announced their AI platform. There's better opportunities probably for me in the market, because even if it flatlines for a year, I've already gotten a 2x out of it from where I bought it earlier this year.
Right.
There's some companies that just still haven't recovered yet. And so I'm not sure exactly, I see AI today in large part how I saw, the metaverse in 2020, 2021, or NFTs also back then, in the sense that you're always going to have two waves, right? You're going to have the wave of hype where people sell the vision, and then you're going to have the second wave, which is the wave of execution, where it's actually coming to reality. It happened with everything, right? It happened with Tesla and their full self-driving, their robotaxi, fleet. People sell the vision, and then they make pricing models discounting that giant vision. And to hell if it takes them 10 years to execute that vision. And I think that it was the same with the metaverse. Facebook changed their name to Meta. They sold this giant vision, and it's going to take them a long time and a lot of money sunk to execute on that vision, with a lot of execution risk embedded into that. Like, they could do it, they could not do it. And I think it's in large part the same with AI right now, because not two people can align on a single definition of AI right now, right? It's such an ambiguously vague thing that it could mean just literally like 10 different things to 10 different people. And so there's going to be a chasm to cross, so to speak, where a lot of these AI companies are going to die down, because right now they're all inflated in the short term due to the vision, but they won't be able to execute on the actual on that vision that they're selling. And so I think Nvidia is short term overbought. I think that Palantir, going up so aggressively, like, I know it was oversold, but still, ChatGPT really turned all of these equity, people and all of the institutions onto this AI hype train. And I just don't know how many of these companies are going to be able to back up their words.
No, I don't disagree with you at all. I think the thing that's hard for me to continue kind of like shaping the rest of what I'm about to say is because I don't know enough about your investing strategy. So, like, are you a short-term sort of investor, or are you more of like a long-term sort of investor?
I'm just buy and hold, boring,
Yeah. Well, I guess that brings up a good point then. Like, let me propose something, because I let's just be frank. Like, I didn't know that Palantir was going to 16, 17 like 6 months ago, right? I thought we had another like 2 or 3 quarters of it being down in the $8 to $10 range before we really started to. I really thought it would take until a full year of profitability for it to really start to build that momentum that we've already seen. We've seen a lot of things like C3 AI and a few other companies start to retrace back down to the downside, and Palantir is staying up there pretty well. It's still down 10%, but it's back to the mid 15s now, which is very surprising. I thought it would have already crashed back down. So it's one of those things that's like, it's sustaining. And it's like, are there enough catalysts in the short term where it might continue to? And that's the thing that scares me. I'm going to straight up to say nobody's gotten hurt taking a profit. But my thought process is like, what if you never get the opportunity to get back in again? And I guess my question would be is, would you sell puts, or do you do that sort of thing? Not really.
Not really. It's not. So I'm up in Canada, and it's not really like very feasible to do it, because we still got a ton of commissions up here. So I would need to sell like 10K or 15K or 20K worth to, just make it worth it for the juice to be worth the squeeze. And that's just a lot of risk for me to be taken on.
For sure.
So I don't really do it that often. And look, quite frankly, I don't really sell positions. But with Palantir, definitely, I think that, I doubled down in the beginning of the year, and
it paid off.
And so I can sell, half, I can trim that, and then I can put that back into, either SoFi or something that I just know more of, because all year long, like in 2022, so I've been DCAing into the market since 2017, like every 2 weeks, every month, just buying random stuff. Some stuff is down since then. Some stuff is up since then. And just like, I'm just keep calm, and every 2 weeks, just DCAing.
Hell yes.
2021, 2022, I was just buying a whole bunch of random stuff, like just brands that I really like, companies that I really like, stuff that has like high, growth potential. 2022, I became more reserved in terms of what I was buying. In 2023, ever since Jan 1st and all the way until now, all I've bought are SoFi, Tesla, and then just a little bit of Palantir, and then Bitcoin. And like, that's it.
Oh yes, on Bitcoin too.
Yeah. And so it's literally, I pretty much doubled my Tesla position. I quadrupled my SoFi position this year. And so it's just been crazy because I've just concentrated all of my DCAing into, 2 stocks. And so my point is that if I want to increase my level of concentration, then why not take, gains on something that was a short term, that just, it struck in the short term, right?
I
So
don't disagree. I mean, there's so many ways to think about it, right? Like, there's so many ways to be like, oh, well, if you're thinking about it in 2030, like, why would you sell? Because you know it's going to be, but at the same time, it's like in 2030, if you're thinking about it, it's like, you know, what's the difference between if you have half the stock or not, right? Like, it's almost the same, like it's same magnitude of a position, right? Even if you were to sell half, or I don't know if you're trying to sell a quarter or a half or all of it,
mhm,
to me, it's like, even if I were to sell what I have 4,000 shares, right? So it's like, even if I were to sell and have 2,000 shares, even if those 2,000 shares still get to $130 a share or whatever, I forget what my price targeted on it is in like 2030, 2035 timeframe. But it's like, that still ends up being over $100,000 in shares, right? It still ends up being a crap ton of money. So it's like, it doesn't really matter as long as you still have a little bit of exposure. And so I
right,
kind of understand where you're coming from. It's like, you made a little bit of money on it, and it could be an opportunity for you to diversify back into some of the other main convictions. I think Bitcoin, I think early 2024 to late 2024, or just 2024 in general, with the halving that's coming, I think that's going to
right,
be something that, I think you're already starting to see it. You know, we're back over 30,000. Everyone thought Bitcoin was going to zero, right? Like, everyone's like, up $70,000 a coin doesn't make sense. You know, I told you
right,
guys, it's like, I kept buying every single month. I was just like 15. I was just like, this all makes sense if it levels out at 15. And what did it do? It leveled off at 15. So, you know, it's always 2.5 to 3x where it leveled off before, and it leveled off at 6,000, you
right.
know, in 2020. And so anyway, I'm not going to dissuade you. You know,
Yeah,
I think you see the vision. I think you're intelligent enough on it, and you're in the tech industry, so I think you have a little bit more knowledge than maybe most people.
yeah, dude. Like I mean, I was really big into diversification when my portfolio was small, and every, friend or family member or whomever that I help get started in stocks, I really overemphasize concentration now as a result, because I'm trying to close out positions and concentrate, because it forces me to do more research on high conviction picks, and just it forces me to, like, I can pay attention to everything that's going on around 5 names. I can't do that for 20 names. It's just not feasible for me, because I'm not doing this full time. I'm not staring at a screen as
Yep.
to what all these companies are doing. And so, for me right now, after having like actively attempting to concentrate to things, my 3 top positions, Tesla's 51%, SoFi's 20%, and then
Oh wow.
Bitcoin's 10%. And so, well, that's 80% of my portfolio in 3 names right there. You know what I'm saying? So, and then ETH is like another 5%.
Hmm.
Um, so there is something to be said about concentration, and then simply because I can pay attention to all of those positions at the same time,
Mm-hmm. No, I've started to get. I used to be solely no ETFs, all that, and I've gotten to the place like you said where it's like you almost need to. There's another thing. Maybe this will be helpful to some people. Maybe it won't be. I was always being like, okay, if I day trade and make the perfect trade that day, right? And I was like, I could maybe get a couple $100. It's like, okay,
Right.
cool. You know, that's the way I think about it now. If I make a, if I day trade appropriately, I could get, 5 figures or whatever,
Yeah.
in the right position. But then I started to realize, I was like, you know what? I was like, I can't guarantee any of that shit, right? Like, I could go up $1,000 or $2,000 in a day. I could go down 1,000 or 2,000. Like, a lot of times you just have to do the dollar cost averaging thing, long term conviction. I get it. And so what I started to realize is like, a good paycheck from a great paying job.
Yeah.
And if I need to get a little bit of money, it's worth me spending an hour or two working for a client that I know will pay me $1,000, $2,000 to do some work, and take that money and just put it in something that would be guaranteed, like the
Yeah.
S&P 500. And then, like what you said, I have now the ability to consolidate all my positions into the things that I truly think are going to be life-changing organizations. Like, I have a little bit of Bitcoin. Google, Amazon, Palantir, Rocket Lab, those sorts of things that I think are still in their infancy. And everything else, like if it gets to a decent enough price, like all my friends were giving me crap that, I still have a bunch of dividend investor friends. Like, I can't believe you sold Caterpillar, man. And I'm like, bro, like I bought it. My average was like 106 on Caterpillar.
Right.
I bought it in October 2019 was when I started. I was telling everybody and their mom to buy it, and it was over 100%. And I gathered probably like another 10 or 20 shares just in dividends alone over the course of like 3 years of owning it. And I was like, it's not worth it. I'm like, I don't see Caterpillar tripling from here. I was like, maybe it will because of inflation, but I was like, I don't see the actual value, the intrinsic value. It's not going to be as growing as fast as a Google or an Amazon or a SoFi or a Palantir. So I'm like, to me, it's worth either just putting that in the SPY or reallocating that capital.
Right.
And maybe this is too much, but you probably like Michael Saylor because he's a Bitcoin guy. So maybe this will help you. But he was on Patrick Bet David on a podcast. It was the first one that they did like 6 months ago. And I never thought about this way, but I thought it was actually a very genius way to look at it. He was just like, well, he's like, how do you transfer wealth through time and ease? Did you listen to this or no?
I've heard. I mean, I've heard similar Saylor stuff, but yeah. Okay. Go ahead.
So he was basically like, well, how do I do that? Right? He's like, I had $500 million in the treasury of my company, and then blah 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 blah. So he's like, eventually he ended up on Bitcoin because it's the premier. But the reason why was because he's like, if you buy real estate, he's like, you're paying 2% a year in property taxes and you don't actually own it, right? Stop paying the property tax on the property and see how long it takes for the government to come take that shit away from you, right? So it's like, okay, is that a perfect thing? And also you can't move it. So it's like, well, how good is it to be able to have wealth, but it's stuck in the same location? It's like some people like location. Other people are like, well, I want to be able to move my wealth with me. Then he's like, well, what about gold? Gold, try having $500 million worth of gold. Not very easy to move from country to country. Okay, got it. So he ended up basically being like, well, what's the best way to transfer money through time? And it's like, what about just investing in the S&P 500? He's like, well, what I saw was during the pandemic, everything went down by 30%. And by the end of the year, it was up by another 20%. He was like, so what was that? He's like, it was inflation of the dollar. He's like, it wasn't actually the fact that things got 50% better in value over that course of time, and 20% from the beginning of the year. He was like, that was just the fact the value of the dollar was getting worse. And the same thing he said about his condo. He's like, I bought my condo for $25 million a couple years ago in Miami. He's like, the same condo was bought for like $50,000 in the 40s or something like that. He's like, that doesn't mean that the condo actually appreciated that much in value. He's like, that's how much the currency actually depreciated.
Yeah.
And so, and then he was basically talking about how the S&P 500 has gone up 7 to 8%. So he's like, really, if you think about it, the S&P 500 going up 7-8% over the past 10 years, that's the real inflation, right? Because it's basically Fed controlled. And he's like, so you can talk and listen about the inflation of this and that. He's like, but really the true inflation of what you're looking at is the opportunity cost of what you can invest in. So he's just like, if that opportunity cost is above the S&P 500, then you're net positive. If it's not, then just put your money in the S&P 500 because that's basically just keeping your money straight with inflation at that point. And it's kind of a different way. And it's a kind of an unconventional way because obviously inflation is inflation and that's given by the government. But it's like the FOMC is the one that kind of controls the inflation numbers, if that makes sense. So it's kind of like, or the CPI or whatever, whoever the hell controls the inflation number, it's kind of a ghost number. And so at the end of the day, it's like, I hear you 100%. It's like, you kind of have to figure out what things you actually want to concentrate in to truly make a difference and get you out of what your life is like now.
Yeah. I mean, you're running against a treadmill, right? Like every year you lose X percent of purchasing power. I feel like everybody will make that argument for whatever they're trying to shill, though, right? And the reason why I say that, and granted, I am like Bitcoin's my third largest position. I have quite a substantial position in it, and honestly, it's just like for me, it's just a hedge against the equity portfolio. But in reality, like in the short term or even in the medium term, like they trade very similarly because human psychology is the same, right? And so, that all that Saylor is saying is technically true, but it would only be true if it didn't, trade on an open market where the market decides what the price is, and the market is very easily influenced by emotions and fear and greed, right? And so I think that in order for those types of arguments to play out, you need to give them a long time horizon. And to give it a long time horizon, I mean, again, to my earlier point, you're running against a treadmill, and the treadmill doesn't give a shit if it's gold, if it's real estate, if it's life insurance, if it's equities, if it's whatever. The treadmill is a treadmill. Like, you lose X% every year, regardless of what you buy. And so the name of the game is can you run faster than this thing and try to outpace it?
Yeah. No, 100%. I think that's really eloquently put. And I always think about it relating back to something that's super simple, because it just always stuck in my mind. Because, like, I remember we used to have an Acme, which is kind of a northeastern supermarket chain in Pennsylvania. And I remember going very young to the supermarket. I remember like a 20-ounce bottle of Coke was 69 cents. And it's like, now you're lucky if you go to some of these places and it's not above $2, but most of the time you can find it for $1.89 or something like that. But you go to some places over $2. It's like Coca-Cola, the 20-ounce bottle, you're not getting more value than you used to, right? It's all about the fact that you're running against that treadmill you talked about. That same 69 cents back then is now worth $2, right? And it's like, okay, so now you've depreciated the dollar by that much, probably close to 66%, that now it's increased the value of what you're purchasing by 3 times. So it's pretty astonishing if you think about it in that perspective. It's like, okay, and that's just pure inflation, right? I mean, it's very interesting to think in that respect. And so, and you're just looking for that thing to beat the treadmill.
It cuts both ways too, right? Because that same bottle of Coke was 330 milliliters yesterday. It's 250 today. It's going to be 175 tomorrow. And so you're buying more to get less. And that's a really depressing thought for a lot of people, because it gives them the sense of hopelessness. Like, oh, why should I invest? Or because for a lot of people, like, life gets more expensive, but inflation is something that I feel people only started talking about, at least just normal people, not the fintech community or the Twitter, Twitter community or YouTube community, like normal people that I interact with at work or on the street. I only feel like they started noticing and talking about it after 2020. And it kind of makes sense, right? Like, you pump up 40% more money supply, and it's like, yeah, of course people are going to notice their grocery bills and their fees are going to go up, gas and everything else. So now it's like front and center in people's mind is inflation, and it's like, what are we gonna do about that? Because we're having this overhang where people are waking up from a drunk night and they're like, oh, why do I feel like crap? Well, it was great in 2021 when everything was hitting all-time highs, but that was just the Fed just pumping more liquidity.
Yeah. No, it's a really good point. I think you put it really eloquently. I think people are really just starting to catch on because they were spoiled, right? I mean, we were pumping just enough to kind of keep inflation at 2%, or at least that's what the Fed said. But at the same time, I think it might have been a little bit more than that. But at the end of the day, it wasn't something. It's like death by 1,000 cuts, right?
Right.
And from like 2008 to say 2020, it was 2, 3 or 4% a year. People weren't really, taking notice. But when you have to take out a second mortgage to buy eggs at the grocery store, it's definitely something that, pretty interesting. You see people literally like walk into the egg aisle and go like this. You're like, oh, and yeah. Anyway.
Well, that took a depressing turn.
Yeah.
So is there anything that you're looking at right now to actively get into, or any new positions?
I further consolidate the portfolio, just like you were talking about.
Right.
And me and a friend, I have a decent amount of Johnson & Johnson, Pepsi. So just a few staples of my dividend portfolio that are hangovers, right? That, I kind of started initiating several years ago. And it's like, right, do I continue to hold on to these things, or do I take 75% of it, put in the SPY, and then take 25% of whatever I sell and invest deeper into these high conviction plays, and continue to consolidate the portfolio. Because maybe this will make a little bit more sense, because this is probably similar to where your head's at. My thought process is keep my money, the majority of my money and wealth, stuck in, say, a SPY or something that's going to keep up with the market, because the S&P 500 basically is the top 500 companies, and the ones that are profitable stay in, the ones that aren't get kicked out, and then keep like 20 to 25% of my capital. I mean, but this is my long-term vision: 20 to 25% of my capital and individual securities, like we're talking about, that can have that exponential potential growth, and they have a little bit more risk to them. But you do your research enough, then I feel like you could eliminate some of those risks, or at least feel more comfortable in taking on those risks. And so that's kind of where my head is really at. And so further consolidation of the portfolio, like Pepsi, Johnson & Johnson, and a few other positions are something that's always kind of on the chopping block for me, because it's like, while I love Pepsi, I feel like it's kind of done a decent run. I think if you look at like the dividends reinvested I've had over the past few years, I'm up over 80%. And so it's like, okay, well, I don't think that Pepsi, it's like $185 a share. I don't think it's going to go to $360 tomorrow, right? I think it might go to $360 if you give it 10 years or so, because they're going to buy back shares, or they're going to have inflation, and so that's going to depreciate the value of the dollar. So I think it'll get to 360 eventually, if there's no share splits or anything like that. But it's like, I'm looking at things like Palantir and the like that could 10x or 20x, or I think Rocket Lab could even 50x in the next 15 years. And so it's hard to be able to sit there and be like, well, this is more secure. But it's like, but even if that's the thing, is like, I go back to kind of what I started off as, which is like trying to break through my way of life and my current, I guess, satisfaction of life, and I guess my lifestyle right now. It's like, if I lose the money that I have in Pepsi, which I guess is like 50 or 60 grand, I don't know how much it is. It's like, what do I have to work another couple months? Like, it's not that big of a deal, right? But if it, that going from 50 to 100 grand, won't change my life. But if I invested in something like a Rocket Lab or a Palantir, and it 10x's, and it goes from 50 grand to 500 grand in a matter of 5-10 years, or even a Rocket Lab does get to the 50x target that I'm kind of forecasting, it's like, shit, now that 50 grand's $2.5 million, now I can go and do some shit, right? Or put it, sell a portion of it, put it in the S&P 500, get that little bit of dividend every quarter. And now you got a couple of those positions that go from 20, 30,000 to 100 some thousand, and you get 5 to 10 of those $100,000 positions. Now you got a stew going, and now you actually got something where you're like, all right, I can get off the grid. I got a little bit of FU money. I have a place to live. Nobody can kind of take my sanctuary away from me.
Right.
Nobody's gonna, I don't have to work if I don't need to, but if I see a good purpose, I will do something and continue to work. And so it's like that. That's where I think everybody's trying to get to, is that level of like sanity and sanctuary. And I feel like that's when the game really starts, because this is something, and I'm curious to get your take.
Sure.
The closer I get to that point, the more I'm just like, ugh, like I can retire. I could put my feet up in the sand and just not work another day in my life. Sure. But I know for a fact I will continue to work. But I feel like, how long will it be? Will it be 6 months? Will it be a year? How long will it? Maybe I'll get so lazy and tired that I'll, actually give up in general. And while I think I'll keep working on something, maybe I won't. Maybe I'll give up. But the closer I get to it, the more lazy I feel like I get. And the more I'm like, oh, I'll buy this, I'll buy that. I start losing discipline. And I feel like that's always just the spirits and the energy of the world testing whether or not you're worthy of getting to the next level. Anyway, back to you. I'm curious what your thoughts are with all that BS that I just spewed.
No, I mean, I would agree with a lot of that. I mean, I feel as though it's more difficult to keep up a high pace, even though like it takes a toll on you, right? It burns you out and it's exhausting. And I mean, for me, like I'll set these outrageous goals for myself and then just walk through the thought experiment of saying, how can I achieve this, instead of, discounting it off the get-go and saying, oh, I can never do that. How can I, get to making $1 million a year, right? I probably won't be making $1 million a year next year, but how can I do it in 5 years? How can I do it in 3 years? Whatever. I'll be better off than if I had not done the thought exercise in the first place. So I think that's one piece, and then the other piece is really interesting, is actually seeing the light at the end of the tunnel, with regards to, wait a minute, 5 years ago, for me to retire on my portfolio was a dream, but today I can forecast it, and tomorrow it's going to be an inevitability, right? And so if you think about it in that sense, your enthusiasm builds over that time, which is something that can counteract that burnout or that loss of discipline, as you put it. Because I think that, I mean, for me, like I'm at that stage right now where I can forecast it, to say, okay, all I need to do is continue with my current pace, and I'll be here by this time if the market cooperates. If we have another 2022, then all bets are off. But if the market cooperates, then this is what it's looking like. And every year it gets a little bit more and more accurate in terms of what does that FU number look like, because you remove more and more uncertainties, right? And it's actually interesting. I was chatting with with a friend of mine who they weren't in investing, and then they were looking at my portfolio, and I was like up. It was a week when SoFi was going bananas, and so I was up like 7K one day, and then 12K the next day, and then like 5K the next day, and then like 8K, and they're like, what the fuck, like, is this just free money? And then I was showing them a couple of screenshots of I'm down 15K today, or I'm down 10K today, and it's just you get so desensitized to that after a while. Because I remember when I first started out, man, and I closed off a day and I was up $200, and I was just like skipping down the freaking sidewalk because I was like, I'm rich, like $200. I didn't have to do anything for the. And the truth is that the further along you go, it's the same emotions, because you're going through the same percentage ups or downs. Yep. Number one. Number two, that you're never going to, sell anytime soon, because you haven't reached that high level target. So you can be up 100K tomorrow, and like, yeah, sure, it could be great, but it's still like in the middle of the pot, so to speak. You haven't taken your chips off the table. And so it's play money until you actually cash it in. And then, I think that an interesting thing that you said that I really want to pivot to is your portfolio. You said you're holding Google, Amazon, like a lot of the FANG names, and you're saying they're still in their infancy, or they still have a long ways to go. And you reminded me of this, and I'll put it up on screen, because everybody, I feel like, wants to do really fancy shit. They want to bend over backwards to try to beat the market, because they think they're smarter than everybody else. And this was a tweet by Joseph Carlson, and he put this out a couple of days ago. And it says, to outperform the SPY by 5x, to outperform the QQQ by 3x, to outperform almost every super investor and hedge fund over the past 5 years, all you had to do was buy the already biggest company in the world and hold. And that's, I mean, Apple just crossed the 3 trillion level. And I want you to talk a little bit about, the FANG names, and why you still think that they have such a high runway of like continuing their compounding.
Mm-hmm. So I'm not a disliker of Apple, right? So this is going to seem like I am when I say this, but I'm not. But you have these companies now, Amazon, Google, that the cash flow from operations is absolutely stupid,
right?
And people can't fathom it, right? In the early 2000s, people saw Exxon making $50 billion, $40 billion, Microsoft making the same, and they were losing their minds. And now it's kind of become to a point where, don't talk about net income, because you can skew a lot of those things with depreciation and one-off tax items and stuff of the like. But actual cash flow from operations. So basically, when you think about cash flow from operations, revenue minus cost of goods sold minus, selling and general administrative costs. Mm-hmm. Basically, what comes in the cash register, actual cash that comes in that you can use to invest or move, pay off debt, what have you. So the actual cash register that comes in after your main expenses, that's kind of your cash flow from operations.
Right.
Amazon, Google, they're all, in the $50 billion plus range, right? And I think a lot of people will look at Apple and be like, well, they made $90 billion. It's like, well, that's awesome. How far behind is Amazon and Google, right? From making that $100 billion range, right? I don't think that they are that far behind. I think a lot of their costs are one behind them. I think they've kind of hit their massive expansion phases where they hired a lot of people. And with that, they've been very focused on efficiency over the last few years. So I think that they're now kind of pulling back. Their revenue kind of tailed off a little bit. And, there's things like that are coming out right now, like AI, and what Amazon is doing is super focusing on these things. Like I feel like their trajectories are still going to continue to grow.
Right.
And a lot of their expenses are going to be kept at bay because now they're thinking a little bit more, they didn't have a big pandemic that they had to feed through, right? Where e-commerce went from 9 or 10% a year to 14% a year and basically doubled or, almost doubled or maybe went up 50% comparatively to the year before, right? I mean, that's a big footprint that Amazon had to eat. Now that they had, and they've, retraced a little bit, laid off some folks, stopped some of the warehouses. It's like they still have a lot of those warehouses that they've already built and put capital into. Now it's just a matter of kind of executing. So I don't think that Amazon and Google are far behind in terms of getting to the same place of an Apple where they're making $90 billion in cash flow from operations. And if you think about that, Apple made 90 billion or so in 2022, or will make around that. And they have about the same cash flow from operations. If you think about it in that perspective, they're trading at a 30x multiple, right? So if you were to say, take the same for a Google, which I think made like 50 billion or something like, and you were to give them a 30x multiple, and then eventually in the next 2-3 years, I think they will get to the same level of earnings or close to as an Apple, making 70 to 80 billion. And then, a few years after that, get to the 90 billion. It's like, these will be $3 trillion companies not too long from now. And will they likely double? Because that would basically double them, right? I think Amazon is a 1.3 or 1.4 trillion dollar, and I think Google's 1.5, 1.6 trillion dollar. That will effectively double those companies in the next coming 2 to 3 years. Maybe not 2 to 3, 3 to 4 years, I would say. And I think if you look at the S&P, while it's great, I think it'll double probably by the time we get to 2032. It'll probably double. And we'll go from a 4,800 SPY to close to 10,000 SPY by 2030, 2030, 31, 2032. So, and I think that that's partly inflation. That's partly just the fact that we're going to continue to grow. We're going to continue to streamline, kick companies that aren't growing out of the S&P 500. But I honestly think that, they're still growing, right? If they didn't, my thought process, and going back to your original question, why do I think they're still in their infancy? And then I'll stop because I go on these tangents and don't let you speak enough. It's your show.
No, man, you're the guest. Go.
But my thought process is the following. If they thought they were mature businesses, they would be paying a dividend.
Well, Apple is.
Apple is. I would say Apple is more mature than a lot of them. Amazon and Google, I think, are still. I wouldn't. Infancy is probably not the right word, but I think they're kicking it into second or third gear. They're not in fifth or sixth gear yet.
Right.
Apple, I'd still say, is in fourth gear. They might find something that might kick it back into third and kind of restart the acceleration a little bit. But Amazon and Google's reinvesting so much into its business already, billions upon billions of dollars a year, and they can't find enough money to give, so they end up buying back shares. And so it's like you start thinking about it, it's like that alone, that won't move the market cap, but that'll at least increase the share price. So, I mean, they're buying back a crap ton of stock every year. Granted, they do give a lot in stock-based compensation as well. So, it's partly just offsetting that. But at the end of the day, it's like, do you really think YouTube's going away? I don't think that we've fully monetized YouTube Shorts. That's hugely taken over India. And we have barely monetized YouTube Shorts. And I'm sure Amit and you can attest to this. If you made any shorts, you barely get paid any money from monetization. So that, I think, is something reminiscent of what Instagram did, which is a meta product for Instagram Reels, where they rarely had any sort of advertising. They got everybody hooked. They tried to increase the market share of people's time throughout the day. And then they slowly started implementing ads, and look how much money that's generated for Instagram as a subsidiary of Meta. And I think that's something that YouTube is trying to do. About the search business, I know Tanner talks a lot about this, and that's his opinion, and I respect it. I just don't agree with it. Is like while it might, that search part of the business from a web advertising perspective might go down, I think that people aren't thinking that AI and the results that come with AI won't have some sort of advertising component to it. Not everything is black and white. Some things are ambiguous. Even if you physically search into a google.com and you search for something, you're influenced by the advertising piece of search. And so why wouldn't the same happen with AI? Hey, we're curious about, it's like, well, according to Coca-Cola, it's like, well, it's probably a sponsor, right? Or, hey, what is the best opportunity for me to get fit? It's like, well, we've had this, this particular workout routine by XYZ company. It's like, might be an advertisement, right? So there's still a bit of potential to transfer from one to the next. And I still feel like the virtual and voice assistants, which is also considered AI, not necessarily just Bard or DeepMind that Google has a percentage of, is still not necessarily fully used. And this is something that came from Gary Vaynerchuk, not necessarily me, but he's like, what if you just say, hey, Google? I'm saying Google because it's, if I say the other one, I'm going to trigger something in my house. Hey, Google, I want black wafer cookies. Okay, I put Oreos, which is an Nabisco product, which is Mondelez International, right? I put Oreos on your shopping list. It's like, well, I asked for black wafer cookies. I didn't ask for Oreos. Right. It's like, hey, I want jeans. Hey, remind me to get jeans. Okay, I put on your reminder list to go get Levi jeans. It's like, why are you choosing Levi jeans, right? Like that's an advertisement. That is something that has yet to be fully implemented, that is yet to be. And so I still think, I'm joking, but I'm also being somewhat serious when I says I don't think Tanner's watched WALL-E, because if you remember in WALL-E, those people are literally just sitting in their motorized chairs going around, and they're watching advertisements all over the place within like this massive ship that's traveling through the universe. Like you think it's a joke, but in reality, like that's kind of what we're getting to, right? We're all walking around with these devices in front of our hands that shed and show advertising on them all the time. And so I still think that Google's everywhere around us. Androids are still 70% or 80% of the market share, even though everybody loves their Apple phones, and I do as well. I use an Apple product. Right. 80% of the phones around, I think, are mostly Android. So, I think that great company to own.
I mean,
that's pretty much it.
Yeah, it's interesting, right? Because all of the FANG names, and when I say FANG, I just mean like Microsoft, Apple, Google, Amazon. I don't mean Netflix. But all of them, which would make a really different acronym, which would skew this show south. All the mega caps right now, like they have buybacks or they have dividends, but at the same time, they still have prospects for new diverse business lines. Like Apple is doubling down on, this metaverse vision with the Quest. No, that's Facebook. They're new ones. The Apple.
I forget what it's called.
Yeah, you know what I'm talking about. Apple.
They should have called it the iPod.
Yeah, they are the Vision Pros. That's what they are.
The Vision Pro.
So Apple is doubling down, and it seems like they're competing with Meta. With Oculus in that front. Google, it seems, has their own, battle with regards to search and AI and how GPT is or is not going to disrupt it. And then Amazon is just, doing their own thing. Yeah, I mean, compounding is a hell of a drug. Amidst in the chat just being weird.
Is he just attacking me? I gotta check.
That's a myth for you. You can
What
always
is he saying?
you can count on him for some good insights. No, he's not attacking you. He's just talking about the Vision Pros. But I get it, because I mean, I've seen like those movies where you just like put on the glasses and it's just like you just get spammed with ads. I could totally see that being a reality later on down the line. Do you have any opinion on that, actually, on the whole AR trend and where that's going?
I think that's literally in its infancy. So it's obviously way earlier than where Google and Amazon are. And I was actually very bullish, and it hit home for me when you said everything kind of has two waves, right?
Yeah.
That hit home for me because I was very bullish when Facebook changed their name to Meta.
Right.
I thought it was a grand vision, and I thought it was very intelligent of Zuckerberg to actually do something like that. Because that takes a lot of guts, right? And I'm sure he's learned from the likes of Microsoft and others that hesitated to make a pivot, and
Right.
it cost Microsoft. Microsoft would be the biggest company by far. I mean, it's the second largest on the New York Stock Exchange, but would be probably a $4 or $5 trillion company and way ahead, I think, if they pivoted as quickly as, say, Apple did to sort of the wearables and also kind of like the Zune and the hardware space.
Right.
But it took them a while, right? They said we kind of focus on software, and then eventually they tried to, and the Zune just didn't pan out for them.
Right.
They never got the phone market income, and luckily they had Satya, who was such a great internal director or executive on the cloud business, that really started to kickstart their revenue. And I think that now they're really truly starting to kick it into back into third gear or so from a Microsoft perspective. But I think that they're still playing catch up because they were kind of put on their back foot for 10, 15 years or so after 2000. I'm trying to remember what exactly what your question was. I'm just went off on my own little world again.
No, on the AR side, look, I think eventually the thing is with these companies, man, that if there's a space that one of them enters, all of them are soon going to enter.
Yeah.
And I think, with Facebook or Meta entering this space first, with the Oculus, there's definitely opportunities there to just steal market share in terms of time spent or eyeballs, let's say. Oculus steals timeshare from YouTube, from browsing, from Reddit, from all of these different things. It's the same thing as saying like, well, who's Netflix's biggest competitor? It's not Amazon Prime, it's like PlayStation, right? It's, just to highlight that it's what is the opportunity cost of somebody's time and where would they otherwise spend it? To that point, I think Microsoft has made some pretty solid acquisitions. I mean, you obviously have this like Activision deal, but they also have like Xbox, which is, one of the biggest gaming platforms. I could totally see them making a partnership and then just taking that entire IP onto an AR platform as well. And then all of a sudden you have three major players in the space. And then, if all three major players are in this space, then, obviously Google is going to get in. I know that they've been working on, I mean, they were the first ones with Glass in 2013 that failed. I wouldn't be surprised to, so it's just like they all sort of encroach on each other's territory. And that's just, I think, a consequence of them being so gigantic that they struggle to find ROI playing in their lane, right? So they're going to sort of try to steal market share from the other person.
100%. And it makes me think, because I feel like if we were to, meaning my company that I work for, if Microsoft were to come out with a VR headset, which we've used as well, because, it takes a lot of money for us to, one, fly from Houston to Louisiana to then take a helicopter out to some of the rigs. It costs a lot of money to do that in time. Versus if you have a VR headset and you have the ability to kind of look at things and be physically on the facility, it's going to save you tens of thousands of dollars just on one trip. So I see the use case of in many industries, not just my own, but the thought process is we would probably go with the Microsoft because we use Teams, we use all those other interconnected products. We don't use the Google suite of products. So if Microsoft were to come up with a
they do.
VR headset,
They have the HoloLens, right? And the HoloLens is an AR headset. It just has different applications right now.
Yep.
I mean, they won a pretty significant army contract to provide, to make these like Terminator-like soldiers, and But my point is that you're now playing on a different sphere, right? Mm-hmm. Where before it was just physical goods and products, and then you had like the internet, you had software, and then you had like the app store, and then you had apps, and now you have like the metaverse. AR devices, right? And you have a new app store, you have a new fee for all of those apps, and you're just building layers on layers on layers of IP or of software that people can then just crank out more money.
It makes me think like how Microsoft hasn't tried to do more advertising on that, and maybe they have, and maybe I'm just not privy to it as of yet. And I'm curious. I'd like to talk to Vitaly about like how much advertising do they do on the Quest, right? Like when you open up some of these games, like because you are connecting to other people around the world. While it's connecting, why isn't it showing you an advertisement for say 5-10 seconds, kind of like what you would see on a YouTube, right? And it makes me just think like, yeah.
Anyway. I think like this is going to be controversial, I feel, or I don't know, a hot take, whatever you want to call it. But I feel like Apple's best product was none of their hardware products. Or sorry, Apple's most lucrative was none of their hardware products. It was the fact that they introduced this gate-kept, walled garden of an app store. And it seems to be that they don't need to bombard it with apps because apps are proven to make a shittier user experience. And they already have sufficient runway through cranking out money on their other product lines, where all they need to is, make it as cheap as possible, as accessible as possible, as user-friendly as possible, and just a completely seamless experience. Why? Because they capture more market share. And the more market share they're capturing, they're stealing from everybody else because it's a net new market where, the limit has been undefined. And so my point is that if 80% of the market goes onto the Quest, it's going to be an uphill battle for Apple's Vision Pro to take, market share. So it's whoever gets the finish line first in terms of capturing this as a hardware device, they are the ones that set the rules for the App Store because that's where the ecosystem is, right? And so imagine this. I mean, it's 2008 or 2011, and you have an Apple coming out with the first smartphone. In 2011, they released the first App Store. All of a sudden, Android has to release an App Store too, and you have this like dichotomy of two players playing in this new space. It's the exact same thing, right? Everybody is combating each other now on the hardware device to win that user, so that then that user can be a future customer of their App Store and software.
Tevis, I don't think that's controversial. I think that's just very forward-looking. I think it's a very good observation.
Thanks, man.
I think I'm gonna steal that and use that on every other podcast I ever go to. No, I'm just kidding. But no, I think that's very future looking, and I think that it made me think. I mean, you listen to great minds that it's part of the beauty of doing some of these podcasts. It's part of these great minds that when you listen to people that do focus and put their love, sweat, and tears into advancing civilization. Yeah, it's when you get the great minds of like a Gary Vee being like, voice is still underrated, and I agree with that. And you'll see the future impacts of voice and how that impacts. And and I think that you hit something on the head that I never really thought about. Right, in order for applications on smartphones to truly take off, you needed an app store, and Apple was there to kind of fill that void. And I'm very curious as to who will be the outright winner, because Google Apps or Google Store took forever to kind of really truly kick off. And we know that they're behind. They still probably make a lot of money, but not to the extent of and have the, I guess, royalties, I guess we'll call for the service that App Store provides as say like a Google Store, which I don't think is as advantageous in terms of the royalties and revenue that it brings in, but I could be wrong on that. But yeah, who would be the outright winner? And to be frank, at the moment, from a VR perspective or AR perspective, with a $300 entry price, which I'm honestly still surprised because I've had like several waves of having great conversations like this and been like, there's a Target 2 miles from here. I don't know why I haven't just bought one. $300 is not a lot of money. Like, so I'm still kind of curious, like why I haven't ventured out. And I feel like part of me is afraid because I got rid of video games for like 8-9 years when I was like in college until like up until about a year ago.
Mm-hmm.
And unfortunately, my friends caught me at a depressed moment in my life where I needed something, and I kicked back into video games. Part of me is afraid to buy a Quest because I'll probably never get out of it, and I'll probably just like be in my bed, just like looking up at the ceiling with this Quest headset on, just like playing video games for the rest of my life, and nobody will ever hear from me again. But fortunately, I won't get kicked out of my apartment. I guess that's the good thing.
Yeah, I mean, they're super early days right now. Like I've tried it and I've played games on it and watched movies on it and stuff. And it's just, I'm not going to be an early adopter. Like I'll try it, but I'm not going to actively use it until it's usable. Because right now it's this clunky freaking phone that you attach to your head basically, or screen that you attach to your head, and it's just it's heavy, it's not really usable, and all the games that you're playing on it are the quality that you would expect from like an early 2000s game. And so we've gotten a little bit spoiled with like the Elden Rings of the world, where you have like this incredibly diverse and immersive world, and then you go into this new platform and all of a sudden there's a ramp up time for all of those like Unreal Engine powered games to be on this thing. But my point is that there are business applications to this that far outspan, media and entertainment, right? If you think of like COVID, for example, made remote working really normalized to the point where a lot of these companies are just pulling out of real estate in metropolitan areas in lieu of remote working. Well, all of a sudden you can now have an alternative that's a little bit more immersive than just a Zoom window. And so for those applications, I think, or working cross department collaboration with people that are in other countries, like that could be an interesting application as well. But really, the wider point to be taken away is that the hardware devices from these companies are almost the picks and shovels of the actual apps that will be built in these ecosystems. Because while a company might have like Zoom, let's say, they have an app for Apple, they have an app for Android, it's really a matter of, okay, who are going to be the players in that space, right? I don't want to pay double the prices to be on two app stores. Like who's the predominant player, and then who are the secondary players that are going to follow suit after that. So that's going to be a direct byproduct of how fast they innovate. And I think that right now Apple has a really interesting strategy, right? They sat back and they learned what Oculus was doing. They validated that there was a market demand from Oculus, and to see, okay, well, this thing is gaining popularity. They are making revenue. They are doing all of these things, and it is usable to some extent. How can we do it better? Well, let's remove the remote controls. Let's add more cameras onto this thing. Let's do this and that. And yeah, sure, it's over $3,000 today, but it's predominantly geared towards developers so that they may get like a 6-month head start to build the apps, so that then they can do a mid-market version.
Yeah.
And all of a sudden it's usable, right? And like they can wedge themselves into the market like that, is my point.
No, that's really intuitive. I think, how do you think this is going to impact, going and still staying on the metaverse topic, how do you think this is going to impact cloud computing and the amount of revenue? Or am I thinking about it incorrectly, that the metaverse is not really going to need a lot of cloud computing?
Well, all the software, I don't think it will, right? Because and maybe I'm ignorant to this, but I don't think it will, because if I'm thinking about it, all that data is going to be stored somewhere, and you're already accessing your existing data. Like I'm logging into my Zoom account, let's just say, or my YouTube account, through another gateway, through another mechanism, but the actual database or the cloud where that data is stored is the same. So it's not like you're duplicating all the data. Matt already exists online on 10 different social media platforms. You're just accessing it from another screen. It's like you were to buy a second computer and go on, Facebook and then you have it open on 2 windows. You're not duplicating any of that data. They just point to the same database.
That's a good point. I didn't think about that. But I guess my question is, though, would not all these games... this is where I need to do a little bit more research, because I always assume that everything that continues to come out, AI, Meta, is always going to be advantageous in cloud computing. And I think that there's still a long runway for cloud, which is another reason why I like Amazon. It's another reason why I like Google a lot. A lot of people I don't think give credit to the fact that Google just hit their first profitable quarter. And I think it goes back to that point of the expenses are kind of where they're at, and the revenue is really going to start hitting the bottom line from here on out. And the same thing can be said with Palantir as well. It's like a lot of those expenses are now paid for incrementally. Now you're going to see the cash flow from operations, really the margin from that, continue to expand rather rapidly on something like a Palantir. But that's something I need to do a little bit more investigating on, because it's like, would you still be able to use, say, Call of Duty, for example?
Sure.
Would you still be able to use the same sort of maps and data that you have on Call of Duty in, let's just say, what I have on my computer versus if it was a VR instance? Because would it still be like how you fit into that? Like, is it going to change? That I'm not smart enough to know. And I'd be curious, because I know somebody that was very heavily on that side of it. Anyway.
I mean, if I think about it, the answer is yes, because like all of that data is stored into a cloud server, whether it is AWS, GCP, or Azure, or something else. But let's just say it's stored into a cloud instance, or a physical server for that matter. For you to play Call of Duty on like your VR versus your PlayStation, you would just need to download all of that, data locally, and then you can access all of your previous save states that's already stored. There wouldn't be any incremental data. Now, if you're, there's no incremental data, right? Because let's say you play a game and then it saves the results of your game. It would just be the same as though you were playing on PlayStation. It's not like you're duplicating, you're playing 3 games instead of 1 game. You're just playing it on a different platform. And so that's what I'm saying. Like, it's just another entry point, but it all leads to the same like data lake. But the other, like, the real winner, I think, here is, and this is a stock that I own, not the show, but I really believe in them, is Unity. Unity is, I think, my 4th or 5th largest position, something like that. And really the reason why I bought them is because, like, what they do is they're a platform by which games are built on. And something like 60% of all mobile games or 70% of all mobile games are built on Unity. And they're the main platform for AR and VR experiences. And so now that the AR and VR platforms are coming out, you think about it, well, you have these mega cap companies pushing the hardware to every household in America and around the world. Obviously, they're going to be successful. There has to be some software that is populated in there. All independent dev studios are going to be working on the software, right? Zoom Technologies is going to be working on the Zoom app, and Google is going to be working on Google Hangouts or Google Meet or whatever. YouTube is going to be working on their app.
Yeah.
But all the independent developers build their experiences through Unity. So I just think that as this new platform is being built, Unity is the one that's providing like all the blueprints for all the buildings that are going to go in this new city, let's say. Which is really cool.
No, that's an interesting take. So are Enovix and Unity in the same sort of realm, or not really?
I haven't looked at Enovix.
I was gonna say I know our friends at the Finance Junkie podcast. They're very much jumping on the Enovix side, and at least from what you're talking about with respect to graphics and creating platforms on which AR and games can be made. I know that they were showcasing a few weeks ago, Enovix and one of the games that they just came out with.
Yeah, I'm not sure. I know Unity is predominantly on like the software side. It's like if you've ever heard of Unreal Engine, Unity would be like a competitor, for example. It's just
Okay.
like a studio that provides you like what do you use for your editing software? Um, it would
Me?
be yeah, it would be like that for an app or for a game. Like it would
Okay.
provide you stuff out of the box. In terms of like, let's say if it's a video editing software, they would provide you like text bubbles, or they would provide you, you know, crossfade, or they would provide you all of these different little tools that you can make your perfect edit on. Unity is just like that, but for an app, and especially for a game like a physics engine.
Okay. Yeah, I use Movavi. It's not that good. It's pretty simple. Yeah.
Fair enough.
Yeah.
Okay, I mean, we've been. How are you looking for time?
I'm good. Yeah, you want to keep going. You know, I don't know how normally long you keep these things. Keep them going, but yeah, I'm not pressed for time. I got plenty of it. So
Yeah, I'm probably like, let's keep it going for a little bit more. Um, and then just maybe 10 or 15 minutes. And if anybody has questions, just throw them in the chat. Yeah, I think this is a good comment. Enovix is lithium batteries, whereas Unity is AR and VR software. Um, so, and then, yeah, because I have the podcast, SoFi weekly podcast later tonight. So I don't want to be like in front of a screen all day
no,
long.
I hear you.
You have Palantir tonight, don't you?
Always. Yeah.
It's gonna be
The
fun.
same.
I like never tune in for Palantir Weekly, and it always kills me a little bit. I'm just so exhausted after the SoFi podcast that I'm just like ready to cry. I don't know how Amit does it, man. Honestly,
The smart dude. Yeah, I'm thinking that I have to look at what company that they are talking about. It wasn't Enovix then. It was some other sort of. Uh, so thank you for bringing up my mistake, because that I would have been thinking about that for the next week or two. Thinking that Enovix was like a. So I'll have to look at what that company was that they were building, and it might have been Unity. Honestly, you might be right. Maybe they were talking about Unity. I'll have to ask Amit or Vitali or something.
Unity actually had a pretty big pump on the Apple Vision Pro news because they were partnered with Unity on the software side, and like they name dropped them in the announcement, and Unity jumped like 15% on just that name drop alone. So
Yeah.
it goes to show the magnitude of that ecosystem that Apple commands. It's like everybody has, this idea of like the App Store. And now we have the benefit of hindsight to say, okay, well, we've had the App Store for like 12 years. What did the App Store really unlock for us? And the answer is a whole ton of things. It was like Steve Jobs' last real like innovative launch before he passed. And then you look to AR and VR and you're like, well, there's going to be another app store, and Apple's going to collect more fees. And Apple's already doing like tens of billions of dollars on their existing apps. They're on phones because that's so widespread. There's a real opportunity here. And I think that, my money's on Unity to actually be that beneficiary, especially because they're a smaller company, right? Apple is like $3 trillion, whereas I want to invest in a company that's much smaller than that.
Yeah, that makes sense. Huh. Yeah, I need to do more research. It's like I feel like after Palantir and Rocket Lab have kind of been focusing on my portfolio, I haven't found like the next wave, right? So those have kind of gone from being companies that were very speculative to now kind of getting to with Palantir being on a runway towards profitability, and Rocket Lab is kind of still like within the next year or two kind of aiming towards that short-term profitability, and it still has about 10 quarters worth of runway for cash. And so it's probably prudent for me, just like you're kind of saying, to like look for what's that follow-on position that I'm going to add, because it might be something where I'm not to say I'm going to trim Palantir here, but it probably would be smart for me to look for, if I am going to consider to consolidate, is there another position that is part of this new realm, right? Is it SoFi? Is it something like Unity, where I need to look into what are going to be the next drivers of expansion in the economy, something that's going to be much faster paced than, say, the broader United States economy, which is going to be that 7 to 8% ish a year, kind of like average over 10 years.
Right.
Like, what is it? Is it going to be something like a Unity? Is it going to be Meta when the payments really start coming in? Is Meta going to be the person that does the App Store? So it's time for me to kind of buckle down and do some research to look at some of these futuristic companies and be like, which one is it? It might be 2 or 3.
How soon are you looking to make moves like that? Like,
I don't know. I honestly, it just like kind of came to me. For a while, I wasn't really looking at putting more money into like a new position. But I think it's probably prudent for me to think about, knowing that, we're kind of out on the other side of this rate rising cycle.
Right.
And, it still might happen a little bit more. I mean, Powell keeps teasing that it might be once or twice more this year, but it's like, I think the worst of it is over. We can kind of see the light at the end of the tunnel, unless something kind of comes out of left field and really derails it. But I don't know. It just kind of just came to my mind that, like, am I missing out on a potential opportunity that in 5 to 10 years I'll be, I guess it'll be hitting me across the face, that it was something that I looked at straight in the face and people were telling me about it. And it took me a while. What's a good example? Tesla, honestly, is one of the better examples. I had a friend back in 2013, 2012, 2013, that I graduated with in college.
Right.
And he was like, Tesla, man. He's like, any money that I have to reach out to him. I haven't talked to him since college, but that was like 10 years ago. And he's like, dude, because he knew back then I was even liking the stock market, because I really started getting involved with the stock market in 2012. I got a little bit of money for my internship in oil and gas, and I went back my senior year for college and was kind of talking about stocks. It's like, dude, the only stock you'll ever need is Tesla. And I have been thinking about that off and on for like the past few years. And I need to reach out and see if he actually put his money where his mouth was. And he's probably on a beach or owns an island. Like,
that guy's a multimillionaire now.
Yeah, he's probably a billionaire. Probably knows Elon by heart and like has his personal cell phone number. So, yeah, I need to reach out to him, because that was 2013, right? Like, everyone on here is always like, oh yeah, I invested in 2018, 2019, and they've done well for themselves. So I'm not knocking that, but I'm like, this guy was talking about it when it was like $80-$90, like pre-split. Like, we're talking however many splits ago. So
yeah, man. I mean, for Tesla, like, that was a crazy time. I mean, it's over 50% of my portfolio because I'm a degen, but it's also because it went up, quite a bit when I started buying it, like late 2019. July 2019, I think, was my first buy, and then I just started adding a lot more in 2020, like April 2020, and then it just did like a 5x, and then it did like another like 3x or something crazy. And so I've just been DCAing all the way through, and I've bought it, like, I think the highest I bought it was like $200 away from its all-time highs, and I bought it in December at like $110, and that's all like doubled, and it's just been a crazy ride. But yeah, that company is a crazy, and it's compounding now, right? They're making, like, they have over $20 billion in cash. They're making, double-digit billions every single quarter. Like, Tesla is going to become a really insane company, man. Like, the 7th biggest in the market out there, something like that, or in the world, 7th biggest. Like, and they still have so many opportunities ahead of them, whether it is with full self-driving, whether it is like their battery play. You should see how their battery is scaling, just their commercial use of their batteries, like how that's scaling. And the Cybertruck is coming out a little bit later this year in the summertime. They're going to be releasing 2 new models, or announcing 2 new models this year. Their Optimus Spot, like Dojo, and licensing that. And then you see all of these car companies that are now signing up for Tesla's, what do you call it, charging stations.
Network,
Ford, GM, Electrify America, Volvo, and every single day you see more and more companies. Well, we just talked about what was Apple's like really crazy, profitable segment, which was their app store and it was their ecosystem. And so I think that like for Tesla as well, like the cars every single year, and this is going to be sound unpopular too, but every single year, like the cars become more and more of an afterthought. I mean, don't granted they're not like Tesla is still very much like in the car business, but the path towards diversification becomes a reality more and more every single year for them.
Mhm.
And the vision in the future is strays further away from the pure automotive play with every passing year, right? It goes more into the energy, it goes more into the AI, it goes more into the robotics, it goes more into like even the charging networks as a whole, that the company is just, they have their hands in so many cookie jars, it's insane.
So I've almost entered Tesla like 3 or 4 times. And the first time was back in 2020 during
Right.
the pandemic. And at the time it dropped down to $350 a share. I had a buy order for like, and it's a really sad story. So everybody get their tissues ready. I mean, I was either like 15 or 20 grand, which was a lot of money for me back then. But yeah, it was like 15 to 20 grand. I'm gonna buy X amount of shares at $3.50. I had a limit order set. Intraday, it hit $3.50. Sorry, not $3.50. $350 flat was my limit order. It hit $350.10 was the low of the day. And then obviously from that point in March of 2020, it skyrocketed and split. But back when it most recently hit like $100 and some, I almost bought as well. And at least I was gonna buy leaps. And it's always like something. So that first time was always the only time I've actually ever had like a limit order in to buy.
Mm-hmm.
And so that bothered me because I was like, when it didn't hit, I was like, okay, well, maybe, it's still the midst of the pandemic. I was like, maybe it'll jump up to $400 and then I'll turn back over again and it'll go to 250 and I'll get a better buy. And it never did. And I was like, well, it's just the universe telling me I shouldn't own Tesla, right?
Yeah, it wasn't meant to be. Yeah.
It wasn't meant to be, right? I wasn't meant to be a trillionaire yet. So, so there was that time. And then when was it? It was like a year or two ago when it dropped pretty significantly by like 50%. And then it was more recently that it dropped by another 50%. And I'm just like, every single time I'm like, God damn it. Right. Like this past time, it's like something always comes up where I'm like, okay, I'll look at it tomorrow in depth and maybe make an order. And then I get distracted by work or something like that. And then next thing you know, it does a reversal and I'm screwed. So it always makes me think like, I made a lot of money selling puts on Tesla in 2020 and 2021. Mm-hmm. And it makes me wonder why I don't always have puts being sold on Tesla at like the 150, 140 mark.
Yeah, I mean, there is something to be said, I think, about like just buying little starter positions just as your reminder to do more diligence on the company. Like if I were interested in, I don't know, whatever company, Enovix, I would just buy like a little like $200 or $500 worth, something like that, just to have it in my portfolio, show up every day and be like, oh, like I need to talk. Because now all of a sudden I have some sunk cost in terms of like my own money is at play in this company that I know nothing about. And then you can either like DCA in or just sell that initial position and you're not really losing anything.
That's a really good idea. I've seen other people do that. Like I know Amit has one share of something. I forget what it is, but it's like the same sort of thought process. And I've seen people that have shared their screens as well. And a lot of people do that. And I've done it once or twice, but I don't know why I haven't become in it. I should own, I mean, it's 200 some bucks, right? Like I should own it because at the end of the day, I look at the portfolio every day. What I don't do is I don't look at Tesla every day. So if I look at my portfolio every day and I say, oh shit, Tesla's down a good bit, because generally what I'll do is I'll look at what I'm up or down. Mm-hmm. Let's just say today it's up like 6 or 7 grand today. I don't know what it closed at, but I looked at it like 5-10 minutes before I got on with you. It was up 6 or 7 grand. I scroll over to my plus or minuses and I look at like what the big pluses and minuses are. And then once I see the big plus or minus, I'm like, oh shit, it's up like $2,000 today. I scroll over to the left and I'm like, what is it? Because depending on what it is, it might be one of those positions that I'm looking to consolidate, right? So like, let's just say Pepsi goes up 10 grand tomorrow, or I guess let's just say Monday. I'm probably going to be like, okay, it's time. I've outlived my Pepsi love. Like it pays me, however much a quarter, but it's probably time that I send it out to the field, shoot it, and put it into the SPY. Like, so it's one of those things where like that's just how I do my portfolio looking every single day. Now, if I see that Tesla is down like a significant portion that day, I'll be like, oh shit, something's down 10%. What is it? And it's Tesla. It's like, oh, like maybe I should keep an eye. And then that's a really smart. This is why they pay the big bucks, my guy.
Yeah, I mean, yeah, I mean, for Tesla, like, dude, you know what it is? I think that, like, I have some stocks, and regardless of how I look at them, I'm like, like, I'm just, I can never get to love them. And then I have some companies that, regardless of how often I look at them, I always feel underinvested. And Tesla and SoFi for me are just two companies where I've been adding for 6 months almost exclusively Tesla and SoFi, to the point where like over the past 12 months, I've added like well over 6 figures in just those like names alone. And I'm just like, I need more. I need more.
So the thing that bothers me a little bit about Tesla, and it's a positive bother, right? It's not a negative. It's like the thing that scares me the most is they're now like all these other technology conglomerates. It's like they have their car manufacturing, which makes billions of dollars a year. So like that's been proven. And I never thought they weren't going to do it. In fact, I applaud Elon. So even though I don't invest in Tesla, the thing that bothers me is like, I know, and they've made hay while the sun is shining, which I think is great. The thing that we could get at a huge tangent. There's so many avenues with this one, but the first part I would say is like, I feel like they're so broad of ways that they could take, or so many industries. I haven't seen on one piece of paper like where they think they'll be in 2030 for all those different avenues. And so that's the thing where I'm just like, it's almost like analysis paralysis, where it's like, okay, they got robots. Okay, they have solar. Okay, they have this, they have that. They have energy company that they want to be. It's like almost looking at Google that only has a search business and thinking like in 2004 and thinking, well, what's Google going to be in 2023, 20 years later? It's like, it's almost in the same spot, but absolutely outrageously priced for what it is today. It's almost like Palantir, right? Like Palantir, if you look at it, outrageously priced, but you have to believe in what it is long-term. And it's like, okay, Tesla is what it is today, and it's outrageously priced potentially for what it is today. But if you look 15 years from now and you know that all these verticals are going to take off, it's obviously dirt cheap, and it's probably going to be a $5 trillion company. And it's like, what I don't know is like what milestones are. And so when it was a very simple thing of like, it's just a car company, I was always like, okay, it's just a car company. The margins are eventually going to shrink, which now, like I said, they've made hay where the sun is shining. They were able to get their huge margins. They're now rolling over the margins to continue the growth of the company, to get more market exposure, which is probably a long-term play on full self-driving and the annual revenue that they're going to be getting from that, and yada, yada, yada. But it's like, the thing that confuses me is like, I need to do more due diligence, because it seems like every single investor day, it's not like, okay, this is the progress we made on energy. It's like, nope, like now we're doing robots. It's like, it's I don't want to say it's like a circus, but it's like, it just seems like they're doing so much and they're accomplishing a lot, but it's like, it's confusing, and I need to like bunker down and like actually do my due diligence on it.
They actually have outlined long-term targets in their investor days. It's just like it goes in one year and out the other for a lot of people, because for a lot of people, like they have, like you said, they have so many business lines that it's difficult to actually keep everything straight in your head. But the cool thing, and the thing that I sort of cut them a lot of slack on, is they are looking for high ROI on their dollars invested. And so that's why they diversify, because a lot of their other business streams like the robot, for example, or the full self-driving, for example, they have long time horizons before they're going to start paying dividends out. And so they need to start today so that in 5 years or in 7 years, they can unlock that and start, with that new business. With regards to the car business, I mean, Elon said in the last investor day that their goal is 20 million cars sold by 2030. Right now, they're about, 1.8 million, something like that. So they have a long ways to go.
But the run rate's what, 750 a million now a year?
No. It's higher than that. The run rate's much higher than that. I think they're tracking for like almost 2 million cars this year
To sell?
to produce.
Okay. Sorry.
I could be wrong about that, but yeah, it's so Tesla produced about 1.4 million vehicles in 2022, and I think that this year it's going to be closer to like 1.6, 1.7 ish. Yeah, 1.8 this year. Thank you to Blue Collar Kid.
Wow.
And so, okay, that's the car business, right? So 20 million by 2030. How are they going to get there? They're going to get there by having more gigafactories. Mexico was, the most recent one announced. Elon is teasing an India gigafactory as well. But the cool thing about Mexico is they talked about, in their investor day, like this is going to be the most vertically integrated gigafactory out there. They've learned from their mistakes in Fremont. They've learned from their mistakes in Shanghai, and implemented the solutions in Berlin and in Texas. And they're also going to be like reducing their manufacturing footprint in Mexico. It's going to be like the smallest gigafactory, but it's going to outproduce everyone else because it's so optimized. Like the next gen vehicles are going to have a 50% reduction in cost. And a large part of that is because they're fully vertically integrated with regards to like actually, mining and sourcing their raw materials. And it goes all the way down in terms of like how their factory is even structured from an assembly line perspective. Like in the last investor day, man, they talked about like developing their brand new drive unit themselves that has 0 rare earth materials, like crazy shit, right? And so if you think about that, robots, FSD, all that stuff is gravy on top, because just the car business alone has the potential through this vertical integration and through this massive scale to get to astronomical levels that would far and away dictate trillions of dollars of market cap. And I think like in 2022, Elon was saying that, there could be a world where, we will be the most valuable company. And then in 2023, he was saying like Tesla will be the most valuable company at some point. And so his confidence himself is increasing as well, right? And so then you think about like, okay, well, how does it look from an FSD perspective? Well, FSD can unlock a whole ton of like FSD, and the robotaxi are really like paradigm shifting technologies. Why? Because imagine you all of a sudden unlock FSD and then you can have your car be leveraged 24 hours of the day as opposed to, 2 hours a day or 10 hours a week. And then you have the robot, and imagine how much you can do when you exactly like have an augmented workforce of your entire factory is working 24 hours a day with no complaints. Nobody asks for raises. Nobody gets sick. Nobody has vacation. Nobody complains. Nobody, is inefficient or slacks off. Right. So if you think about all of those things, like it's insane to actually think about, and nobody is accounting for those things. And I don't really care that they're not accounting for them, because you cannot model them into like a very neat financial model. It's still very wishy-washy, pie in the sky. But even from what you can model, it looks very promising. Like it looks ridiculous if you scale it out.
Yeah, I mean, you explain it very eloquently, and it makes me reconsider. Like, it's not that I haven't thought about it. It's just like the valuation is very fluffy as what they're doing today. But the thing that still bothers me a little bit, and I think this is a 5-year looking view, and this isn't a hit on Tesla. I think this is just a hit on the auto industry as a whole. Once you start implementing full self-driving, it's like how many people. It's like cars will, I feel like, eventually just be for the wealthy, where like people owning cars will be a very weird, not in 5 years time, but like, I think people will start talking about this in 5 years time, where full self-driving is becoming so relevant that, like you said, now you have like your own personal taxi that you're then probably leasing out to other people. A lot of people are going to start buying a bunch of cars to be able to, it's going to be like owning rental property at that point, where people are just trying to make money. So it's like, I feel like a lot of people will be priced out of cars in the future, just based off of like the fact that now you have this uptime now going from say 5 to 10% a day to the 90-95% a day, like you're talking about, because you have so many people driving on so many different robo-taxis driving on the road. Right. But that also being said, it's like you said, now that you have so much uptime, now a family of say 3 or 4 might only need 1 car, right? Instead of say 2 cars for each parent or something like that.
Sure.
And at the same time, it's like, well, do we even need our own car, or could we share a car as a community, or could we share a car like with just everybody and just take that car and use it? And it's like, well, you might have your own personal car and not rent it out if you're really wealthy, right? But at the same time, it's like,
so
would you sell less cars in say 2030 because people are going to start adopting this mindset of full self-driving? I don't need a car.
Sure.
I don't know. It just makes me think like how, I don't know the answer, right? It gets back to that wishy-washy point. It's just like, in the short term, I think people are going to ramp up and buy more Teslas and company cars that are EVs and also like have full self-driving capability. But it's like, at what point is it almost like diminishing returns, where it's like, well, you've increased the ability for your car to go from a 5 to 10% availability to date or every day to 90%. So therefore, the amount of cars that need to be on the road is way down.
Yeah. So let me just see if I can just tackle that. First of all, let me acknowledge that this is fucking crazy talk that we're making, like, people not buying cars, but I love it. And here's what I would say to that. 2 things. Number one, even if people don't buy cars, the aggregate cost of, like, I think this is going to sound bad, but I think that the company most hurt by Tesla's full self-driving receiving regulatory approval is going to be Uber and Lyft. They're going to go out of business first.
Yeah.
Right? Because like, why?
Then the car company? Why would the car companies don't need Uber and Lyft? They can have their own device.
Exactly. So, but I was in Guatemala for a period of time, and
hell yes.
I was just living there for a period. I was working for a nonprofit. This was like right out of university, and I hopped into this Uber, and the Uber driver was not the same as the driver on the profile. And I asked, like, what's the deal? And they were saying, oh, it's really hard for us to get approval. And so what they had was they had this like black market system where somebody filed all the paperwork and got the approval. And he had like a driver. He had like basically like 2 or 3 drivers working in shifts, so the car could go 24 hours. And none of them were really him. Obviously, that's like not cool. But I think that with self-driving, it's going to be a similar thing where if I'm not buying a car for myself and for my family, I'm probably going to be buying a car to churn me some positive, gross income, right? Like some positive cash flow. So I can imagine like, oh, I'll buy a rental property and it's going to give me $2,000 a month, or I buy that rental property for, I don't know, $150,000, or I can buy a car for $50,000 and it's going to give me, I don't know, $500 a month or something like that. All of a sudden, you're going to have a lot of people who are going to be leveraging that. So first point. Second point is Uber and Lyft out of business, right? Why would I buy a $10 Uber or a $15 Uber with a driver when I can literally pay $3 for a robo-taxi, right? And then the third point I think to consider is that, okay, people are not going to buy cars anymore. Even still, Tesla is going to sell more cars. And the reason why is because EV cars sold today to ICE vehicles is like single digits. Mm-hmm. But of those EV cars, Teslas are like 70%, if not more, of the total. Like their name is synonymous with electric vehicle. Nobody is really buying a Chevy Bolt. Nobody is really buying, I don't know, you name it, a Neo. The numbers are so small in comparison to the people that are buying Teslas. So my point is, with all of these governments that are having mandates right now and saying by 2030, we're going to be net neutral, or 2035, we're going to be whatever, not allowing ICE vehicles, all new vehicle sales are going to be EV. Right now, EV is synonymous with Tesla, right? Right now, Tesla is 80% of the total EV sales out there per year. And the total EV sales per year is maybe 5% versus ICE vehicles. And so as that number grows, the total addressable market is going to be exploding. That's number one. And then look at number two, because I think Blue Collar Kid highlighted it best. The charging news right now with regards to their infrastructure is making Tesla run. But FSD is this thing that they can package, they can bundle, and they can start selling to all of these other companies that they're going to get that relationship with Ford and with GM and with, whatever. They're going to sell them the FSD package, and they're going to get paid a subscription cost from a B2B perspective. So I think that all EV cars that are sold out there, Tesla's going to get a cut of that because of the FSD technology, even if it is not a pure Tesla that's sold as that EV vehicle. Why? Because there are secular growth trends in EV making a wider market share in the total vehicles sold by 2030. Even if the aggregate number is smaller, the percentage of EV is going to be bigger. And ultimately, I think, when paired with FSD robotaxi, when paired with the fact that a lot of people are going to be using it for, a small business or to positive the cash flow, when paired with the licensing from a B2B perspective, and when paired with a secular growth trend in all of these governments saying, hey, we want net zero emissions, you're still looking at a stupidly growing market, man.
I don't disagree. I just think my thought process is like, when will people, because with the ability to make money, right, on these cars, having them be robo-taxied and everything, it's like at what point do the prices of those and the margins, obviously, for the car companies will go up. So it's like with that, the cost is going to go up. Less people are going to be able to afford it, and more people are going to be more likely to only do the robo-taxi thing, because it costs $3 today to do whatever I need to do versus buying this car up front, which is $150,000 for a normal car now. Because I'm just making up numbers, but
sure,
you kind of see where my head is going. And so my thought process is like, I don't disagree that this isn't a hit on Tesla, right? This is more a hit on the auto industry as a whole. It's like, at what point do we hit that inflection point where car sales actually go down? Anyway, just like food for thought. Because like you said, Uber and Lyft are immediately going to get priced out.
But okay, so let's say Tesla sells fewer cars, right? Uber and Lyft are immediately going to get priced out. All of that revenue that is now going to Uber or Lyft is going to go to Tesla instead. Complete monopoly over the market. Why? Because they're
all companies who have full self-driving. Yeah.
Well, that's the thing, though. No company one of the moats is full self-driving, because they have the vast amount of data out there, because they've been doing this for, so long. Like, there's no company that has a model that's as well trained as Tesla's model is, because they're joining the party late. And so they would rather just license out Tesla's full self-driving and use it in their own vehicles, as opposed to just starting that new to train their model, because you need billions of miles driven.
Mm-hmm. I don't disagree. I mean, I know that Tesla has the thing that is beneficial to them that I think is not as well utilized by other companies is the beta program that has gotten millions of miles, if not hundreds of millions of miles of data. Actually, probably closer to hundreds of millions of miles of data, and probably several billions of miles now at this point. It's like, the thing that I don't understand is why other companies aren't using that. But the thing that I also don't understand is, and I haven't read this in like a year or two, so I could be out of date, is like, when you talk about autonomous and the grading of that, there's like level 3, there's level 4. It's like, the thing that bothers me is like, you have these Tesla shareholders, and like I said, it's more of an ignorance question rather than like an attack, because I'm very interested. I'm not attacking it. It's like, you have these articles that come out that say they think that Super Cruise is a better product than say full self-driving,
right?
Or like they'll say, and it's like, they go through it in like different circumstances, right? Where they're like, okay, it didn't see this, or it's less reactive, or what have you. But at the same time, it's like, the thing that I think is advantageous for, say, Super Cruise in that respect is like, they only let it go on certain roads. You can only use it at certain times. And so like, the thing that's beneficial full self-driving with Tesla is it'll let you pretty much do it anywhere. Versus like a Super Cruise will be like, you can only use Super Cruise on this road because it's been mapped. And so I see both sides, right? But at the same time, it's like, will all these other companies get to the point where they're allowing you to do full self-driving anywhere, or just autopilot anywhere? I don't know the answer, right? And how far behind are they? Why won't they let them be beta tested, kind of like what Tesla does, right? It's interesting. And another thing that I know that a lot of, I forget which one is which. Is it Tesla doesn't use LiDAR, right? Or they do use LiDAR?
No, they don't.
So I think that a lot of the other companies do use LiDAR, which is why some people prefer those versus, say, a Tesla, because Tesla does not use LiDAR. It's more of like an actual algorithm that's like kind of working as it's currently running, right? It's able to like actually interpret what's going on versus like a LiDAR, which is more like radars and God knows what else. I'm not that technically savvy to be able to explain it. So that's the thing that I need to be like looking more into. And it's not a hit on Tesla or others. It's just like, that's something that irks me. Is that something that's like just media portrayed, or is that like, and that's where I like can't get my head around it.
Yeah. So a couple things. I think so. LiDAR, for example, is like it's like sonar. It's like a bat, basically. Like you send out a signal, and then you see how far that signal goes before it bounces off of something. So you can map out an area based on when the signal will bounce. Tesla, by contrast, uses cameras, and cameras you can have like an AV, like an audio video feed, and then you can just start labeling them. You can see it's a toddler or a person or a stop sign or whatever. And so the labeling is really the secret sauce in terms of their full self-driving. And they have like Dojo, which is a supercomputer, which is just to train different scenarios, because they've gotten to such a point where they've trained it with so many normal scenarios that they now need this computer to generate fictitious scenarios to see how the system would react in those scenarios. So the system essentially like builds entire intersections that don't really exist, drawing elements of this one and that one from different countries to train it to the ultimate extremes. But I think with regards to Super Cruise, or with regards to Waymo and all of these different technologies, there's a lot of I think there's a lot of reluctance to a lot of people. Just the idea of the car driving itself, you relinquish this perceived safety of a human behind the wheel. And the interesting part is that Tesla releases their safety reports, and their safety reports comes from their metrics that they gather. And I just want to share this with you.
Mm-hmm.
Like you don't even need to take a look at any of the competition. You can just take a look at some of these safety reports. So here this is quarterly. So here in the gray bar, this is the US average miles driven per one accident. So about every 500,000 miles or so, you have one accident, right? Just Tesla vehicles alone without autopilot will pretty much over double that. Just their other like sensors and their other safety metrics that they have in place. Autopilot technology, as of Q4 2022, they have almost 5 million miles. And I mean, they've crossed that 5 million mark many times. There's seasonality that goes in part, like winter, it's more dangerous than summer, so on and so forth. But my point is, like, when they started in 2018, you can see the trend is just slowly going higher and higher and higher. There's going to be a point where it's going to hit that inflection point, maybe, consistently over 5 million miles driven before an accident, consistently over 6 million miles driven before an accident, that it's just a matter of how much more safe is it going to be than the average US like human driver, right? Mm-hmm. So it doesn't matter really what all of these other companies release, or how relatively safe or unsafe that they may say that they are comparatively to Tesla. All that matters is, in the eyes of regulators, how much safer are they than an average driver? Exactly. So as it stands right now, I mean, it's about 10x safer.
So normal average American. Yeah. I'm curious. Do you have the same? I'm not trying to hit on Tesla. I'm asking out of curiosity, do you have the same data for, say, Chevy or anything of the like?
I don't know that they calculate it like that.
They might not have enough data as of yet.
Yeah, and because like a lot of them are this like level 2 autonomy, which is basically like it can do lane changes for you and it can do like hands off for you, but it can't do like left turns, it can't do U-turns, it can't, so Tesla has a level higher than that where you can actually like it can park for like you can do a full trip end to end, getting out of the parking lot, going into the parking lot with all the turns and everything, fully autonomously. And so my point is that even if you don't compare it to, other companies, all you need to do is compare it to the average US, human driver, and look how much safer it is. And that's really all regulators need to see. And I think that slowly, I mean, it's an uphill battle, but slowly people are going to start being more fact-based and less emotional about these decisions, and it will get approval across the board. So that's the hope, at least.
Yeah. It's pretty interesting. Generally speaking, what that says, it's like if you think about it, it's like, what was it, 500,000 miles for every accident that you see? So it's probably, let's just say the average person drives 1,000 miles a month. It's like 12,000. So it's like it ends up being 1 out of 50 people, let's just say, gets in an accident per year. Mm-hmm. It's like versus Tesla, if you think about it in the same sort of metric, it's like probably 1 out of every 500 or 600 gets in an accident a year. So it's pretty interesting that, I mean, it's very low, right? It's I'm just kind of curious at what point the regulators will kind of let it go through.
And then, I mean, once they do, then all of these other business lines, like with robotaxis and all that, like they can all be unlocked instantly. And like, I think that's the really exciting part, that right now it's just how much more do they have to improve full self-driving before they can call it full self-driving,
Yeah. And then one thing that's pretty interesting is like Project Maven at GM was something, I think they shut it down, but it was really an interesting sort of take, which was like, you were able to rent a car, and now it wasn't full self-driving. This is probably like 4 or 5 years ago, probably prior to the pandemic. But it's like you can rent a car, you spend $550 a month or something like that, and you rent a car, and you can rent it for however long you wanted for the month. And if you wanted to upgrade to like some super fancy like Escalade or Corvette or something like that, you'd have to pay more. But it's kind of like a baseline for $500 a month. And the thought process it's like, well, maybe you're just making a long road trip and you just need some small economic car to burn less fuel or what have you. It's like, then you have that ability. It's like, I wonder if you're going to be able to do this. Well, I think you'll be able to do the same when these autonomous or robo taxis come out, where it's like, I need a truck, or I need an SUV, or I need a small vehicle. It's like, so it'll be cool to be able to kind of call. It's like, you know what, I need to just lay back, have a nice like limo like car. I'll pay the extra, $2 or whatever, so I can like be in this Maybach of a whatever kind of car on my way to work for the next 30 minutes. But I think that the thing that a lot of people don't talk about, it has to do with self-driving, but it's like people will probably gain 30 minutes to an hour a day of productivity. Or they could use it screwing off on their phones. But at the same time, it's like, imagine, for me, a lot of what I do initially when I start up is like look at certain things on oil and gas wells that I need to look at for the day that happened over the past 6, 7, 8 hours, look at emails, answer a few emails. And it's like, by the time that's kind of done, I'm like 25, 30 minutes into my day. And now I can start doing actual physical work and like knock some things out. So it generally takes me 20 to 30 minutes a day, depending on traffic, to get into the office. So it's like, if I had an autonomous vehicle, it's like by the time I got into work, I'd immediately, instead of having to go sit at my desk, look through my emails and everything I'd already have all my emails already done. Not only do I not have to park my car, I'm probably dropped off at the front of the office, which is nice because I can just walk right in instead of having to go up 4 or 5 different turns in the parking garage, park on the level I want, and then go down the elevator. It's like, nope, just walk in through the front door. So probably ends up saving, probably over an hour a day, if not an hour and a half a day of what I need to do. Same thing with my apartment. It's like I generally park on the 5th floor. I live in a high rise, so have to park on the 5th floor of my parking garage. So it's like, you think about it, I have to go down 4 or 5 floors every time I go up and down. Anyway, so the amount of efficiency, like, I'd be able to shorten my day in terms of how long I'm actually out of the office, because I could be like, okay, I'm going to finish up my day, get in the car and do that for the next 30 minutes and then be home by the time I literally close my laptop.
Right.
And it'll make things a lot better. So it'll, it's, I don't think people talk about that enough. The ability to have that additional, ability to kind of add that additional 1 to 2 hours a day to their day.
Right.
Anyway.
Yeah, I mean, it makes sense, right? And so, I mean, I think there's a lot to love about. There's a reason why it's my biggest position by a long shot, because I just think that they're solving big problems that affect many people, and I think that they have the ability to execute, right? So they're like, I have no confidence in their team, in their ability to execute. Okay, I think I have a hard stop.
No worries.
So
you don't need to think. You have a hard stop. It's okay.
Yeah, I didn't expect this to go over 2 hours, but I was enjoying the conversation, so I'm glad it did.
Yeah, me as well. I learned a lot. It's definitely re-inspired me to one of two things: look deeper into Tesla, look deeper into SoFi, so I can actually have a formulated opinion on it. Right. And then thirdly, I need to really start looking for my moonshot. It could be, it could be SoFi or it could be Tesla still. I mean, with the verticals, you have so many people that I trust and listen to on the community that are in Tesla. Like, maybe I just haven't given it the true due diligence now that they started moving into these other verticals to give it another look and see, and I might come out surprised. But I appreciate your time, man. And this is our first time ever really meeting each other, talking to each other, other than me hitting on you from, what is that, 2,000 miles away, as you're in Canada and I'm in Houston. But
seriously,
yeah,
it's flattering nonetheless. I enjoy it.
There you go.
Yeah, it distracts me from the podcast, but
well, hopefully not that much. But
yeah. No, Matt, I really appreciate you taking the time, and I think that this was a good conversation. And to the 45 people that are here that enjoyed it, you definitely follow Matt Money on YouTube and on Twitter.
Yeah, thank you. Appreciate that, brother.
All right, see ya.
Yeah, man. Talk to you soon. Cheers.